What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is October 26th of 2018. Well, folks, I hope you are having a wonderful day wherever you are. Today, I want to spend a little bit of time talking about an epiphany that I had last night as I was heading to bed. I thought back on a clip that was released back in May of 2018 where Warren Buffett was being interviewed on CNBC and discussing Bitcoin and also justifying some of the harsh comments, such as the fact that he thought Bitcoin was rat poison squared, and explaining where he was coming from on that stance. Now, I want to be clear by the title of the video that I'm not here to derail Warren Buffett. He's obviously made a success for himself. He's made his billions. And along with it as well, I'm not here to tell him why he's wrong. I want to spend some time to explain another alternative viewpoint and really point out why I believe he's missing the true value case for Bitcoin, and why a lot of other people tend to fall down this same rabbit hole. A lot of the people who fall into that ballpark of asset investors like Warren Buffett, who really care about producing value 24/7. So without further ado, I'm going to let him go ahead and speak his point here, and then I'll jump in later on and explain why I believe he's misinterpreting a little bit of the value of Bitcoin.
I just want to ask you about that because it sparks so much controversy, and particularly on Twitter and some of the places where you might expect people who are trading in cryptocurrency to be pretty loud about what they heard. What is it about Bitcoin that gets you guys so fired up?
Well, when you buy a farm, you look at the crop every year and what prices are, and you decide whether it was a satisfactory investment. I mean, you look to the asset itself and what it produces for you. When we buy a business, we look at what the business earns and decide how we feel about it in terms of what we paid. But we are buying something that at the end of the period, we not only have what we bought in the first place, but we have something that the asset produced. And when you buy non-productive assets, all you're counting on is whether the next person is going to pay you more because they're even more excited about another next person coming along. But the asset itself is creating nothing. One of the interesting things, for example, is gold. If you go back to the time of Christ and you look at how many hours of labor you had to give up in order to buy an ounce of gold, and you take it forward to now, you'll find the compound rate maybe 1/10 or 2/10 of 1%. And
now, I want to spend some time here. I think that kind of gets the general point of what Warren's trying to put across here. And his case is really that Bitcoin is an asset that creates nothing. That's obviously, it's the title of the video. The point that he's trying to come across is someone like Warren Buffett, who's a value investor and is common to invest in a variety of different assets. He's well exposed on running Berkshire Hathaway into a variety of companies that provide great services and products. As a value investor like that who likes to see cash flow and profitability, he doesn't see Bitcoin as an asset. And I want to be fair here. I actually think Warren Buffett makes a very fair point. The problem in finance is that asset is a very broad term, right? Some of us see assets as their core definition here on Investopedia, which is something that an individual, corporation, or government or country of some sort can look to provide future value that you can build upon in some case. So, for example, it could be something as simple as a commodity, right? Oil or wood could be an asset in a case because with oil, I can refine it, produce gasoline, I can produce petrochemicals, all types of things from the refinery process, as well as from wood, I can go out and build a home. And that home can also be seen as an asset as well because it can be cash generating. It provides a service, it provides somewhere to live for someone. So again, assets in this case, defined in the way that Warren Buffett sees it, are very, very important in everyday life. And with that, to the point that Warren's trying to make, if this is how we're defining an asset in this case, again, it's very subjective, but if we are to define an asset like this, Warren is 100% correct, right? So I'm not here, again, as I stated before, I'm not here to derail Warren's point on this. If we're viewing an asset under this definition, which I believe is the proper definition of an asset, then Warren is 100% correct. But some people see assets as things that you can hold, and over time, the speculative value or the value of it just simply moves up over time. And this is where I want to make my point here. I don't believe Bitcoin is purely a speculative asset in this case. I really don't believe it's much of an asset. I believe that it is an evolution of what it claims to be, currency. Okay, it is a cryptocurrency. It is not aiming to be a cash producing asset, as Warren's referring to here in this definition. It is not a home that you can rent out or a service or product that you can provide to someone. It is purely a value play of store of value and a payment solution, okay? And that's really what currency aims to be, and money aims to be over time. And in order to really understand this, we have to understand that not only that Bitcoin is an evolution in the process of money, but we need to understand the steps of how money got to where it is today. The currency that we all know and love, the US dollars, the euros, the Chinese yuan, the Japanese yen, all the currencies that we know. And let's go ahead and spend some time. I think it's best that we go ahead and understand how money has evolved over time. So there's really been really 4 to 5 major evolutions. I'll go ahead and run through them very simply. The first evolution of money is what's indicated here as a shell. This is what's known as commodity money in this case. This was the first form of money that was ever made outside of barter and trade. Basically, it was shells and all types of little different commodities and stuff that little small tribes and villages would simply exchange with one another, and they all saw it as a means of value exchange. The problem with shells is that they're not divisible. You can't really break up a shell. You could break it up, but it's not easily able to break up and divide into specific amounts. It's not scarce. I can go to the ocean and get a ton of shells, and this was the case with most of the commodity money. It's not fungible, so one shell may not be equal to another shell, depending on the components that make it up. It's not durable. Shells can break very easily. But however, they were not only transportable, but they were also non-consumable, meaning that in this case, the value of them was not found in the consumption of the shells, right? You could get a value of it in the sense of value exchange. So it had these two properties, and it brought about a very interesting concept. What if there was something that we could exchange outside of barter and trade? And we happened to find a really good commodity that did this well, that really stepped out of the category of commodity money and really became a form of money of its own, which was gold in this case. So gold was really the second major evolution of money. And gold fixed a lot of these issues. It really only had 1 to 2 to 3 partial issues. The first one was divisibility. So gold, you can technically divide into smaller fractions, but it's very, very difficult depending on the makeup of it. In this case, you have to smelt it down into smaller fractions. So not very easy. And along with that as well, transportability. Gold's quite heavy. And in the sense of fungibility as well, it depends on the procedures you have in order to determine the quality of the gold in this case. But again, gold is fungible in this case. But as we go across the board, though, gold fixed a lot of issues. We have to give it huge credit in this case, and it's still why it's a great store of value to this day. Gold itself is scarce. It has about a 1 to 2% inflation rate every year, which we're going to talk about as a negative later on. But gold cannot just be simply grown on trees. It's not like trees, for example, that are growing abundantly, and you can just plant in the ground and you'll grow more and more and more. It is a very scarce material that is rare. It is an earth mineral in this case that you have to go through and extract from the ground and refine and put a lot of work into. So that adds a lot of value to it. It allows it to be a store of value. And we're going to talk about, again, how that correlates to crypto and how people build this correlation between gold and Bitcoin and other cryptocurrencies. It's durable as well, obviously. Gold does not wear and tear over time. It's a very, very, the reason why it's kind of referred to as a precious metal, this metal does not deteriorate over time. It's able to hold its quality and maintain its gold properties over time. And also, again, the benefit doesn't come from really consuming it. You can consume gold. You can use it for electronics and all types of things. But really, its value is found in its store of value. Again, holding wealth over time. Now, there was a third and fourth evolution of money, and that is paper currency, and then obviously digital currency through debit and credit cards and the accounting systems that banks use on a database system. But in regards to this, we're just going to keep it simple and focus in on the paper money aspect. Now, paper money did add, a lot of convenience in certain ways. In the sense of its divisibility, you can divide dollars up quite well. You can break it into cents, and it's again, more than anything, its transportability is very, very convenient comparative to gold. Gold is hard to do commerce with, and with cash, it was something very simple. I could exchange it, and then also for digital currency, I just swipe a card. The issues, though, that come with it, we obviously have the non-consumable aspect and the durable aspect. But fungibility is a little bit of an issue in this case. The biggest one being, though, is scarcity. Okay, when it comes to dollars, the biggest issue that we find is that governments who manage the monetary policy with the dollar of that given nation don't tend to have the ability to responsibly manage said money. And we have issues like we saw this past year, over the past few years, in Venezuela and a variety of other emerging market economies. Whether you're in the United States, where in 2008, an emergency response was to print a ton of money through quantitative easing, or if you're in the case of Venezuela, which is more drastic, where the entire currency supply has really lost practically all its value because of the oversupply of it, meaning the overcreation of money in this case, that it not only deteriorates the store of value that that currency supposedly holds, but it also makes it to where it kills off, due to the fact that we've killed off that store of value. It doesn't make it a good payment solution. People aren't going to accept the currency. I might be able to pay people with it quite easily, but they're not going to accept it in that case. So it kills both of the value propositions that currency or that evolution of money was seen to be in that case. And we can see, even as Venezuela has tried to reverse the effects of it, the people in Venezuela are smart. They're not settling for these adjustments in the currency. They now have lost faith and trust in the government. So this was an issue with this new evolution of money. Got to be fair, cash and digital money is quite convenient. And again, the thing that backs it up in a sense as a currency, even though it's, again, paper money not backed by gold, is that there's labor put into it, that there's this value that's being stored in it, and that people can have a reasonable trust for it. That's why the dollar is such a strong currency, because the dollar is tied to the United States, which is a very strong economy on the global scale. So when we go back to this, we have to ask what Bitcoin changes and why it's such a game changer, and why it's important to understand that this is not, Bitcoin is not aiming to be a revolutionary asset. It is aiming to be the next evolution in money, and why this is valuable. Well, Bitcoin itself is highly divisible. If you want to divide Bitcoin, you can break it into 8 decimal points, known as Satoshis. So I can break Bitcoin into micro fractions of an overall Bitcoin. So again, very convenient for small payments. It's very transportable. Unlike gold, for example, which might be transportable, in the case as a comparison to gold, gold is heavy and I have to ship it somewhere. So if I want to send gold to a bank in Switzerland, or I want to send gold to a friend in Japan, I need to ship it through third-party processors. I need to trust someone, and it's going to take days or weeks to do that. Not a very effective system, especially if they want to use it for payments of payment of some sort of a product or service. I can send Bitcoin anywhere internationally, much like most cryptocurrencies, without any third parties, and I can do it within a matter of minutes and for a few pennies. So again, Bitcoin outweighs anything in regards to transportability. Even dollars. Dollars have to go through SWIFT if you want to send remittance payments or wire money across the world, and you have to pay drastic fees for it. Again, trusting third parties. You also have the scarcity aspect. So Bitcoin itself, again, it not only far outweighs dollars as a hedge, but also gold is a hedge, because gold has 1 to 2% inflation rate, at 1 to 2% inflation rate, even still to this day on an annual basis. Bitcoin does have an inflation rate. It's obviously increasing its supply, but it eventually will cap out at 21 million coins. This completely changes the game on the store value aspect, because unlike gold, which is increasing its supply and is diluting the overall gold supply by adding new gold over time, we have Bitcoin, which is finite. It is a new evolutionary factor of money, and it is very, very exciting to see that. Now, the fungibility aspect, that's a topic for a different time in regards to Bitcoin. It's again something that over time, we don't have clear, absolute fungibility. However, I can still exchange a Bitcoin for a Bitcoin. I can know that Bitcoin is equitable in value on the network in regards to another Bitcoin. In the case of durability and non-consumable, again, pretty self-explanatory with what we talked about earlier. In the case of durability, so long as the network is secure, it's not physical, right? It's not physical like gold in the sense of its durability, but Bitcoin isn't going to wear and tear over time so long as the network is running. So now that we've assessed these, we can see obviously on the chart here, the Bitcoin holds a lot of values as we go through the period of time in the evolution of money. We see that we add more and more values, and we start to see the pros and cons of what really people care about. And it seems like we want an evolution of money that offers all these properties, and Bitcoin is doing that. So as we go on here, I want to really get towards my point here of what Bitcoin is. Bitcoin, again, is not an asset. It is a store of value, okay? It is a store of wealth. So if you really want to call it an asset, it's a non-cash producing asset, okay? As Warren was stating earlier, as gold is. It is a non-cash asset that retains value and acts as a payment solution to exchange said value. Now, I want to talk about this store of value argument. We obviously understand I can send Bitcoin to anyone, anywhere across the world, and it's still got some issues to fix. It's not highly scalable, and the apps and interface are quite horrendous right now, even still after being around for 10 years. That's more of a software issue, and that's going to be fixed over time with whether it be second layer solutions or an increase in the block size or, again, improvements to the protocol, the technology. But I want to talk about these core aspects because a lot of people will look at Bitcoin and say, Nick, how can you say Bitcoin is a store of value? I just watched Bitcoin in 2017 go from 1,000 to 20,000 and then into 2018 go down to 6,000. That doesn't seem like a store of value to me. Well, I want to talk about what really defines a store of value here. And I'll even use gold as an example. As everyone knows, gold is a store of value. If we take a look at gold here, and you look at the increase in the price here, you would see that gold is going up dramatic levels of valuation. We've seen just since, say, the 1960s, gold sitting at $35 all the way up to its current price today, around a little over $1,100. Now, that's a massive fluctuation. We can see that there's these big jumps around in the price and everything, but people would say, Nick, just adjust it for inflation, right? That's the thing. You have to adjust it for inflation. Well, in this case, even if we adjust it for inflation, we can see that there are these massive periodic swings where gold goes up and downwards. So the question here that you have to ask is, why is gold seen as a store of value? It's obviously volatile. We can see these swings where even inflation adjusted, where gold increases its value almost tenfold. And then over here as well, during the period where a gold ETF was created and got into the hands of a lot of investors during the early 2000s, and obviously as we stepped into 2008, there's a lot of fear. Gold went up another 5 times from its lows in 2000. So why is gold seen as a store of value? A store of value does not require that volatility is absent in this case. It is more the fact that over time, not only is volatility reduced, but that when I enter in to this commodity or whatever this is, it could be Bitcoin, it could be anything that we see as valuable. When I enter in to this given, say, non-cash producing asset, that for the majority of history, from when I bought it, I have a high chance of being able to get the same value back, if not more. Okay, so that's the big point here, that over time, I'm able to get the original value that I put in. And this is the point I'm going to bring up here with Bitcoin. We can see here, if you just heard about Bitcoin in 2017, or maybe the latter of 2017, right here at the peak, obviously, if you're in this small window of time buying Bitcoin, you've probably not fared too well. And so the first few months of 2018 and at the peak of 2017, if you bought Bitcoin, then yeah, you probably don't have a good chance of retaining your value. But we have to provide some perspective here when we're analyzing Bitcoin as a macro perspective and understanding really what it is. If we take a look here at the monthly, this isn't even the full price history of Bitcoin. Bitcoin goes back to 2009, but we have a chart here from 2011. If you bought Bitcoin any time within this period of history, I'll go ahead and expand this here. If you bought Bitcoin any time between October and November of last year and the beginning of Bitcoin, you have retained your purchasing power, if not made money on your investment. I'm not trying to sell you guys on Bitcoin being an investment here. I'm trying to say that it is building a store of value. And the same goes down here if we're to, for example, close the chart down a little bit lower. If you bought Bitcoin during this period of time, you are still maintaining a store of value as Bitcoin has gone up and come downward here. So my point here is that, as you can see, Bitcoin holds higher support levels over time because it is testing new levels of value. It is building those supports to hold value over long term. Ergo, building the case of a store of value over time. And a lot of this has to do with the mining mechanics of Bitcoin, which, again, a little bit extra details and stuff that could probably explain this a little bit better. But again, we probably don't have too much time to talk about it today. The fact of the matter is, though, is seeing as there is a cost that goes into Bitcoin, Bitcoin's mining, and that it provides that second value of being able to not only store the value, but also exchange the value without the trust of third parties across the world. That is where Bitcoin gets its value. That is why it's seen as a valuable, maybe non-cash producing asset, or really what I like to see it as an evolution in currency. And I want to talk about, again, going back to that misconception. A lot of people, see an investment opportunity in Bitcoin, and they say, well, that's why it's an asset. Whatever you want to label it as, guys, the reason Bitcoin in many cases can be seen as an investment opportunity is because this is an emerging currency market. If the store of value that we have, all the labor and the stored labor that people have put into currency, traditional fiat currency, moves and migrates over into the value of cryptocurrencies by people putting more trust into cryptocurrency over time and utilizing cryptocurrency as a payment network, as that continues to grow, the value of Bitcoin is obviously going to grow as well. That value is being transferred from fiat currency into cryptocurrency, and predominantly Bitcoin and other big names that are going to be used as payment solutions or peer-to-peer digital currency. The big point I want to drill in here as well is another thing as well, that Bitcoin is a payment network. And as this network grows, just like how a fiat currency network grows, or the network of users for gold grows, and merchant adoption grows, we have to understand something known as Metcalfes Law. And this is something that was being talked in an interview here on Money Insider with Tom Lee, who's the head at Fundstrat. He's always on CNBC. You've probably seen him before. Genuine guy, met him in person. He talks about how his fund uses the Metcalfes Law to value Bitcoin. It basically is a correlation of the value in a network is proportional to the square of the number of connected users to the system. So as the users on the Bitcoin network grow, as more people adopt it and utilize cryptocurrency, and also the increase in transaction volume goes up, we tend to find that those two variables actually hold quite close to the value of Bitcoin. I think he stated there was about a 95% correlation in regards to the value of Bitcoin. So they use that in their model to predict price. It has been very, very accurate. Tom has probably been, Fundstrat and Tom specifically, have really led the charge in predicting the value of Bitcoin and finding fundamental value for Bitcoin. So again, going back to this, guys, it's important to summarize and understand what Bitcoin is. In my opinion, Bitcoin is really not trying to become an asset class. We see it as that simply because we view speculative things that can increase in value, or we view things that can grow in value as assets over time. But Bitcoin is not a cash-producing asset. It is a cash-retaining asset. It is an asset that holds its value over time due to the fact that it can act as a store of value and as a payment solution for a global market, as a borderless currency without the need of any third parties or any third parties telling you whether you can or cannot conduct a transaction. That's the beauty of Bitcoin. So I hope that video helped explain it for those of you who might be more experienced in crypto or just newcomers into the space. And if you guys liked the video, please give it a thumbs up. If you have any comments, questions, or concerns, or maybe additions to what I talked about, please leave it down in the comments down below. But hopefully you guys got something out of this video. And I hope for those of you out there who maybe were in the camp of Warren Buffett, who followed that belief that Bitcoin is not an asset, hopefully this has provided some interesting perspective for you. Again, it's best when we all share our opinions and learn from one another. Anyways, that's it for the video, everyone. Thank you all so much for watching, and I'll see you all in the next one. Stay tuned.